Felix here, and Elon just tweeted that a major rate hike by the Fed is going to cause deflation. But before we get to that, we need to understand what actually happened in the market yesterday. Where did that rally come from? It was quite unexpected, wasn't it? So what happened? Well, a couple of things happened, and it's important to review it. First of all, short sellers got caught out. The Goldman's index of the most shorted stocks dropped 8.1%, which means tons of people just got caught with their trousers down. And that's, of course, quite a nice thing. It's been a pretty heavily shorted market. Well, for us long investors at least. Secondly, lots of options traders started hedging by buying more stocks and more options. And that's been quite positive. I do enjoy the beautiful scenery behind me. And thirdly, we got this major technical breach of the 100-day moving average line. Now, there are tons of funds out there that are rules-based. And what are their rules? Well, they buy when volatility falls and momentum becomes positive. And when that happens, you get major inflow. And we saw that from a lot of the major rules-based funds. So that's positive. But there's still tons of funds who are betting on a falling Q4 and are very bearish on this market. So which way should you go is the real question. Well, it depends on your time horizon, I would say. I do think we are going to get more spikes in volatility coming up. We're essentially going against the Fed, and that's a pretty risky move because the Fed has caught us or managed to catch us out before. And there are now quite a few economists who are, I know, we always laugh about them, they're typically wrong, I used to be one of them, but there could be, what they are saying, a 1 percentage point interest rate hike, and that would, of course, really slam the market pretty hard. So don't be too buoyant yet, because we are kind of caught in the crossfire here between the bulls and the bears. Now, to get onto Elon, very simple story. Essentially, if you are in the world of innovation, then your major concern is that, I'm just going to try and walk away from the rabble and the noise here. Your major concern is that manufacturing costs are going to drop. You're going to replace most of your employees with Elon bots, and therefore production is going to keep getting cheaper and cheaper, and that causes deflation, right? Falling prices. Now, a bit of deflation would actually be quite a nice thing. I mean, prices have gone up at least 10% last year in the last 12 months. So say they fall 5%, well, that would actually be quite pleasant. So nothing to complain about. But long-term deflation, well, look to Japan. What happens? You stop buying stuff because if I buy a Tesla this week, and if I wait one more year, say it's going to get 5% cheaper, then I'm going to wait one more year. And next year I'll come to the same conclusion, and consumption just completely falls off the radar, and the economy shrinks, and you just need continued stimulus, and nothing really works the way it's meant to. So that's the concern, and we've had kind of a deflationary 2 decades. Globalization did that. Buying a pair of jeans 20 years ago was $100. You were able to buy a pair of jeans in Walmart for $9.99, that kind of thing. That's deflationary. So there's been lots of that, lots of technology. Everything kind of got cheaper, or the prices stayed the same, but just very much the same thing because inflation is still there, but lots of items got cheaper. So same with food, mass production. We can talk about that. That's a terrible subject, really, but at least in the short term, it made food cheaper. Continues to, So Elon's probably looking a lot further ahead than most of us, and I think it's an interesting insight. Cathie Woods is of the same opinion. I think Elon is probably the more powerful point of view here. So yes, I think it is possible. I think it's possible the Fed's going to do too much. The Fed's going to tank demand significantly, and in a way that'll kick off a growth spurt for lowering costs and replacing employees a little bit faster with self-driving cars and trucks and robots and so on. And it's going to cause this kind of new industrial revolution with a period of significant unemployment, lower costs for products and goods, which is good for stocks, quite frankly, because they will just be more profitable. So us as an investors, asset-rich people will benefit, but the asset poor will get poorer and poorer and be essentially dependent on government handouts. And again, I think that's kind of where we're heading with the way politics has been going. The money printing does that, right? The inflation hits those hardest who don't have assets. That's really what happens. So there we are, a little roundup here from, yes, Venice, you guessed it right, and I appreciate you watching. If you enjoy these rambles, then do hit that like button and make sure you watch the next video wherever I post it. Thanks very much.